listen to what the jibber jabbers on financial TV were saying about the banks and the credit. They were all excited yesterday.
So the story out of the banking industry is that credit continues to remain very solid.
And that's a bold-faced lie. Because this morning we woke up and the Dow and the S&P are negative because they're worried about credit. The banking industry, not only here in the United States, but in Europe. The one thing I've learned over all these 50 years of trading, never listen to these financial jibber jabbers. Always check your bond market. The bond market is a wonderful thing because it always tells you the truth. It always gives you good truth. It tells you which direction the market's going to go. The economy's going to go. Gold. That's also a terrific source. Gold tells you, like right now, when gold is going crazy like it is, it's telling you, sending you a message that something's wrong in the economy. Something's wrong in the stock market. And going forward, you better be cautious. Now, yesterday, it was interesting. The S&P was hitting another all-time high. And the AI stocks were moving up. And the S&P was right there. Then all of a sudden, boom, I'm watching a 10-year T-note, different than the 10-year Treasury. And the 10-year T-note starts to rally. What happens? Take a look at the chart. When the 10-year T-note started to rally, what we started to see was infrastructure, tech stocks, the support. Look at the ETF, IRA, started to collapse. So the infrastructure support stocks, like AVGO, MU, all these stocks in that group, were starting to get weak, and that pulled the S&P back from its all-time high. So you had FOMOs jumping in the S&P as would make it all-time new high. Get me in, get me in. But because I watch the 10-year Treasuries, I knew, this market's going to pull back. The minute I saw the 10-year T-note starting to go up 2 basis points. So again, when you're looking at for truth, the other day, the banks, everybody was all giddy about the banks. So the banks are doing terrific. Really? Earnings, yeah? Well, guess what? If you look at Citibank and you look on Tuesday right here. Now, this is my color-coded chart, the one I designed. This is your regular chart over here. Look how the Citibank started to soar. But my chart tells me institutions were pulling money out. It was turning red. So I told my members, hey, look, there's a problem here. And so FOMOs were jumping in on Tuesday, jumping in on Wednesday, and I said, this is forming a head and shoulders. Look at the sellers coming in here. And guess what? We were right, and it pulled back. Another one, take a look at Bank of America. If you look at, again, on Monday or Tuesday, look at the big move. Look at a big green candlestick. And then they jumped in again. And I said, no. My color-coded chart that we designed, I said, no, they're selling in here. This is going to come all the way back down. So the FOMOs were jumping in right at the peak, right at the top like they always do. And they're going, get me in before it goes higher. Get me in at 52.60 before it goes lower. Come on, before it goes higher. Keep getting me in, get me in. I'm going to lose out. And I said, boy, they're crazy because this thing is going to pull back. And it did. Look where it pulled back to. So the point is, when you're looking for truth, you don't listen to financial jibber-jabbers. When you're looking for truth, you look to the bond market. The bond market always gives you the right direction that the stock market's going to go in. Remember, the stock market is forward-looking. The bond market will give you the information you need if the market's going to be going up or down. And the bond market is terrific, tells the truth. So, too, the gold market. Gold market's never been wrong. Or the bond market. So if you want to learn how to follow these, and you want to know how you have a chart like this, just go to philsgang.com. Be happy to help you out. But boy, it gets maddening when you listen to these jibber jabbers. They're just giving you the wrong information. Watch that bond market. It tells you the truth, and so too gold. Everybody keeps asking, how much further is gold going to go up? It's just going to go up until it doesn't. It's that simple. What's going to take down gold is when they cut all that money supply. This gold can keep going up as long as they keep putting in the money supply. And as soon as there's plenty of money for margin accounts, so the tourist investors don't know what they're doing, keep on borrowing and borrowing and borrowing. But the minute all that money stops, all that M2 money, stock prices pull back, all the traders who are using margin money, they'll panic, get me out, and bam, that's when the stock market crashes. They always do. So you have great information to protect yourself. You just got to know how to use it and find it. We'll help you with that. philsgang.com, doing it since 1998.